Hi everyone. In this video we're going to go over journal entries for a production report. So this is going to be a continuance of a previous problem that we did where you completed a production report. So now you're going to see some of the journal entries associated with that. You won't see all of them, okay? So what I'll try to do is tell you what the original entry was so you can follow it. Okay, before we begin, you need to know debit and credit, okay? So we're going to see mostly work with a work in process account, which is an inventory account. You increase it with a debit and decrease it with a credit. Okay, so we are going to go over the problem in your textbook, all right, which is exercise 5-29A. Prepare journal entries for the first production department. Refer to the churning department information for Whitson Dairy. Okay, so remember, we're working on a stick of butter, all right? I hope I finish this before, otherwise it's gonna melt. All right, so what journal entry would have been made during the month to record manufacturing costs? Use wages payable as the credit for direct labor costs. Okay, so they're telling us to use wages payable instead of direct labor. Okay, so we're going to work from the production report, and here's what we see. Okay, we see that the production, put down my stick of butter, hope I don't step on it. Okay, so the production department for the costs added during January, all right, direct materials were $1,730,000. Conversion costs were $568,000. However, we need to break that out. So we need to let's look back at the prior problem, and we need to look for the original amount of direct labor. So direct labor was $10,000, okay? So remember, conversion costs include direct labor and manufacturing overhead. Okay, so the journal entry that we will make that's associated with that is we are going to debit the churning department for $2,298,000. Now, when you work in the lab, they won't have debit and credit. I like to do it just to keep my work neat. Remember, the debit is always listed first, credit is listed second. Okay, so now what's happening is they're taking it from, for example, raw materials, and now they're putting it into work in process. So remember the process. It goes from raw materials to work in process to finished goods and then finally sold. Well, when we're working with process accounting, we're going to work with the process. So the first process that we're in is the churning department. That's where they're mixing up all the ingredients for the butter. The next part, we will go to the forming department. Okay, so we're going to transfer that out to the forming department. Okay, so $2,298,000 was added into working process. Now we're going to take it out of raw materials. So we credit raw materials, which is an asset account. We're crediting, so we're decreasing that account. Inventory. And that is $1,730,000. Next, we're going to add it into wages payable. That's increasing that account. It's a liability. We're adding that in. That's going to tell us we need to pay those people that have worked on the product. Okay, and then the next category that we're going to take out of is manufacturing overhead. And that is $558,000. Okay, so right now that has those costs have been added during January. So journal entry during the month to record manufacturing costs. This is to record manufacturing costs that happened during the month. Okay, the next requirement that we're going to work on is the journal entry at the end of the month to transfer the cost of butter, I didn't use my New England accent, in forming department. All right, so we're going to transfer it from one department to the next. All right, so we look at the production report. Here's what I'm looking for. I want you to look at the very last schedule, and that is completed and transferred out. So costs assigned to units completed and transfer out. That's the number we need. We're going to transfer that number from the churning department to the forming department. Okay, so I just go over here and work in process inventory for the forming. Let me just make this clear. Okay, that was $2,170,000. Okay. All right, now we're going to go to work in process. And let me use the right color. This is churning. Now, so what you're doing here, you're crediting the churning department. So what you're doing is you're taking it out of the churning department now. So it's going from churning to forming. Okay? And when you credit that, that's taking that out of that account. Okay? All right, next thing it's going to ask us to do is to figure out the final balance in work in process. Okay? All right, so here's where you'll get those numbers. All right, so go to the very beginning of your schedule where it says costs added during January. That is $134,000. So your beginning work in process, January 1st is what we're looking for. Beginning work in process is $134,000, right from the schedule. Okay? All right, next, you're going to make a journal entry for what you added. So this journal entry, you're just going to post it. All right, so you bring that down, $2,298,000. Okay, remember that comes right from there. Okay, now the next one, again, you're transferred to forming. What did you do to the inventory account for churning? You credited it that. So that is decreasing it. So you got 2 million. Well, it will go right here, just so you know, when you work in the lab, it will be 2,170,000 on your credit side. Okay? Then you add these two up, subtract this because it's an asset account, all right? And your final balance is $262,000. You can double check this number as well. So go to your last schedule again and look for your ending work in process. That will be $262,000. So that's a check for you. Figure it out first in your T account, figure out that final balance, and then check it to the production report. Okay? And that's it. That's how you do some of the journal entries. I'm not having you do them all. I just chose a few. Okay? All right. So get right in the lab and have fun.